Hi, this is the Trading Bitcoin Show. We have Tyler Jenks here and Tone Phase. Just an FYI, Champions League game is starting pretty soon. So let's find out what's happening and if we have enough money to bet on it or not. So switching it over, first of all, Tyler, how are you doing?
I'm doing great, thanks. I'm down here in Chattanooga, Tennessee, and we got 4 days of thunder showers. So I'm
Really?
indoors all day.
Oh my God, it feels like 100 degrees here today, hence this. But Tone, how are you? You're also inside. It doesn't look like you're wearing a dress. I don't know what's that, maybe they made Barbie Buys Dips created a new situation for you.
Yes. No, it's actually kind of warm. Oh man, I forgot my hat. Here come the trolls. There we go. No, it's actually pretty hot here. I've been needing to get my AC units fixed like this entire winter because they don't really work, and I haven't gotten to it yet. So this is really gonna suck. But I am off to Europe in about a week and a half, so I won't be home.
All right. Well, gentlemen, dive right in, please.
All right. Let's go straight to screen share from my end, I guess. Let me I'm just gonna do a quick shout out. Tyler and Leah, you guys are from Lucid Funds, and just check out the website. You can see the link on Tyler Jenks's Twitter account, and check out Lucid Funds, which has a long history of managing other people's money. My disclaimer is I want people to learn how to trade. Please check out the Learn Trading section of Liberty Life Trail, eventually to be migrated over to tonevase.com. I tend to focus on section 6, which is time analysis, which are those numbers above and below my candles. You can also check out tonevase.com, the new website, where I will be doing workshops coming up in Dublin, in London, and in Montreal, and also Berlin is now open for registration for July 7th, Montreal June 23rd, London June 16th, and Ireland, Dublin, Ireland on June 9th. Also, the indicator page, check this out. People continue to get scammed by fake tone vases on Telegram. Assume you are talking to a scammer on Telegram and not me, and never, ever, ever send any Bitcoin to an address from Telegram. Please use the websites if you are not friends with me personally already, because you're probably going to get scammed by a fake Telegram account. All right, let's. I'm gonna get Tyler's take as I go through. Let me make this full screen. All we're looking at is the price. I don't have any indicators up at the moment. We're already at almost 500 viewers. Leah is gonna keep charge of the live chat. So be good, jackals, or you will get banned from my channel. And also try to ask good questions. I know it's difficult, but try. So I continue to look at the weekly chart of Bitcoin, and it continues to remind me of Bitcoin itself in 2014. And with one minor exception, the Bitcoin of 2018 looks a little bit weaker than it did in 2014. I know it's hard for many people to comprehend, but this is what we're looking at. I continue to think that the current environment of Bitcoin is very, very similar to the environment of what is now August 2014. I'm sorry, what was August 2014 is now the current environment. Now, prior to the last couple of days, prior to this $1,000 drop, I was comparing the current environment of Bitcoin to June of 2014, but I have now pushed it forward onto May. Now, why did I do that? So as you can see, today is already Saturday, so our week is about to end. The week is about to end right at the 50-week moving average and above the descending trend line that got broken about 5 weeks ago. We went into the 30-week moving average. We got rejected, and we are now flirting with breaking the 50-week moving average. Something we have not done since, well, guess what? The last time the price of Bitcoin closed below the 50-week moving average was the week of August 11th of 2014. And the last time we had a weekly close below the 50-week moving average, not broke down below it, but simply closed below it. The last time that happened was the week of October 2015. So you can do the math. So between August 11th, the week of August 11th, 2014, and the week of October 19th, 2015, Bitcoin remained under the 50-day moving average. That is a 14-month period that the price of Bitcoin stayed under the 50-week moving average. So the good news for right now is that if we are repeating what happened back in 2014 and we close below the 50-week moving average, we would have done so in a significantly less amount of time. So, and time is important. So the peak in the price of Bitcoin came December 11th. If we do end up closing below the 50-week moving average, this would have happened in May of 2014 from December 11th. That's exactly 6 months of time, right? Took us 6 months from December to end of May.
5 months.
5 months. Sorry. Yes. Not 6 months, 5 months. So 5 months of time. How long did it take us back in 2014? Well, the peak in prices came November 25th. So about 2 weeks earlier. The close below the 50-week moving average came in August 11th, right? So that's about almost 3 months later, right? A couple of weeks below that. So we're going to say, let's say even 4 months. So we're doing everything faster by 3 to 4 months. So it's possible that we will spend a lot less time. Again, if you use percentage basis and not absolute values, I would say if the last time we spent about 14 months under the 50-week moving average, it's possible that we're only going to spend about 8 months or less, maybe 7 months below the 50-week moving average this time around, because everything is happening a little bit faster. Also, speaking of the weekly chart, I did see so I continue to consider this as the area. I did see an interesting, somebody tweeted something at me. Let me go to my notifications. I don't normally show other people's charts, but when they're, reasonable, I don't necessarily mind. That one was reasonable as well. Not the one I was going to, though. Yeah, if I don't get to a tweet within like an hour or so, we get to look at Leah.
Stop it.
Were you wearing shoes or no?
Hell no.
Oh, God. See, this explains the knee injury as well. She's just a
No, because the end of that video was not me.
Was that yesterday?
Yeah. And Tone sent it to me on the show and it came up by accident.
Where were your crutches?
Yeah. Oh, you're asking if it was.
Oh, no, that video is like, what, 3 years old?
Oh, okay.
No, like 8 months.
Wait, how long ago was that video?
Last fall.
Oh, that was last fall. Oh, wow. Okay, so here's something interesting, right? So I continue to compare the current environment in Bitcoin to the environment of this area here. Interesting. You know what? Let me, I don't know where this chart's from. Like I said, somebody just tweeted it at me. If I, how do I pull the image out? All right, let me try this. That's not what I wanted to do. Shoot. Give me 1 second. because I don't want to, I think I should use this. Okay, that's better. So just so I can zoom in. Okay. So somebody sent me this image on Twitter. Yeah, it's not gonna be the cleanest thing, but now I can annotate a little bit. So basically, I continue to compare. So a couple of things. So clearly this was posted a little while ago. I don't see a date on this chart, but it looks like it was back in April before May started. Okay. So a couple of things. First of all, the price of Bitcoin didn't really end here. The price of Bitcoin went all the way to about $10,000 going into early May, I believe. So it's more like it came into this area, okay? Now, I continue to be of the belief that this area is equivalent to this area in here. That's been my view on it, okay? That's been my view on it. Whoever put this chart together, as you can see, it looks reasonable, right? However, here's the minor exception. I considered this to be the trend line. Let me get a straight line going. Like that, okay? That was my trend line to kind of try and cover this peak in relation to this peak, okay? Now, if you look at the lows, 1, 2, and 3, 1, 2, and 3, that seems to be in line, right? However, you can also see how this took significantly longer time to develop from 2014 into the low of 2015. This expectation had us already bottoming out in the vicinity of the 4,900 that I've been talking about, but in early May. Now, we're already in late May. So obviously, this has progressed significantly longer. Is it possible that this is the environment and we have broken above the trend line? We're going to test the trend line from the bottom end of it. And this is this. Is that possible? The answer is yes, it's possible. It's not likely. I still think that our peak that took place a couple of weeks ago is the purple peak, not the double top that took place back in February. But if this scenario does play out, obviously at a slightly longer timeline than this person initially expected, then the 4,800, or in my tweet of mine with percentages, 4,975 area could be like the 4,975 area is my most optimistic bearish target. Okay, I don't know how else to say it. It's my most optimistic bearish target. Is it possible we're not going to get as low as 4,975? Yes, it's possible. What do I think the probability of us not getting there at this point? Well, let me just go back to my Twitter for a second, right? In my Twitter, and then I'll let Tyler talk about his weekly outlook, including Hyperwave. So you guys remember that that tweet with the percentages? I don't even tweet that much anymore. I have no idea where it went. Maybe I should pin it back to the top. Right now I have the current video pinned. It was probably around this vicinity somewhere. Yep, here it is. Somewhere here. There it is. I'm going to pin this back. Okay. So mostly because I want to look at the date of that tweet. The date of this tweet is May 8th. If I go back to the daily chart, which, well, not back to, but I'm looking at it for the first time. Let's look at where May 8th is. May 8th is at a price of 9,300. And a few days prior, when I was like, making that bet with Doug Polk, it was basically the same week as the peak of Bitcoin at around 9,800, right? So at the time, Bitcoin was above 9,000. And my expectation was that there is an 80% chance that that we will go lower than the $6,000 bottom. That was at a price of Bitcoin above 9,000. Now that the price of Bitcoin is in the $7,400 area, or is it 7,530? Now that the price of Bitcoin is in a $7,500 area, obviously my probability that the $6,000 low will be taken out has increased. So I would say that there is now, in my mind, a 90% chance that we're going to go lower than 6,000. And my most optimistic of the scenarios, once we go lower than 6,000, is 4,975. That's my most optimistic one. Obviously, my most pessimistic one is 1,300. Okay. And on this note, I'm going to hand it off to Tyler. So I'll stop screen share for a second, and then it's up to you, Tyler. Do you want to guide me through screen share from my end, or do you want to pull up something on your end?
Yours will be fine if you just use the daily, and if you wouldn't mind on your daily taking the 50 off the moving average and adding a 2. So you would have a 2, a 7, and a 30.
A 2-day moving average?
Yeah.
Tyler, on that
Because
point,
then we're going to switch back to the weekly. And then we'll have a 2, a 7, and a 30 weekly, which is the same as a 14, a 50, and a 200. But I just want to point something out. Yeah, Leah.
there actually was a quick question on that in the live chat. On the Consensio video that we did, you used the 14 and the 52 as moving averages, but we're putting a couple different ones in now. It was just a quick question of why you changed it.
Right. Well, I change them frequently across asset classes, and sometimes I find I need to change them within an asset class. For example, Bitcoin or cryptocurrencies. And that's for a couple of different reasons. In fact, let me just get into that for a second.
Wait, I'm sorry, Tyler, you wanted 2, 7, and 30 or 2, 30, and 50?
2, 7, and 30.
2, 7, and 30, okay.
Right, and then we'll use that in just a second on the weekly chart. So this is a daily chart, and we've got a 2, a 7, and a 30-week moving average. Now, normally I just use 2, I use a 7 and a 30, but Leah's...
well, what does a 2-day moving average do for you on a daily chart?
Well, it does a lot. It moves with price, but what I'm looking for now on the short...
Because I would just set my chart to a 2-day candle, and then it's like the end of the candle is the moving average.
Yeah, that's true. But what I'm looking for on the short term, which I define as
maybe not really. My math is way off, but sorry.
Well, yeah, it's close though. But what I'm looking for on this thing I call Consensio is the principle is very simple. The principle is that for Bitcoin specifically, we have 2 trends. We had the uptrend that went from approximately $500 to 20,000. And we've got the downtrend that went from 20,000 to the current price today. 2 trends. So it's very simple. I believe it's going much lower, as I've said over and over again. Right now, 4,800 is the intermediate term, and the long term is down at 1,000. Okay.
Oh wait, let me throw your I can put the hyperwave lines in here.
Well, it's tough on a daily. We can do it on a daily.
Oh yeah, we can do it on a weekly. Sorry, yeah,
we'll do that on
the log then.
Yeah. Okay, so that's the overriding principle. Is what Consensio is trying to do is in any uptrend with 3 moving averages, a very short one, an intermediate, and a long-term one. The bull market is where the price is above all 3, and all three are moving up, and the price is above the shortest term. The shortest term is above the intermediate term, and the intermediate's above the long. We've gone over that over and over again, and everybody in the world knows that principle. In a down move, which I just said we have been in from the top of December, you just reverse all that. The price is below the short term below the intermediate below the long, and all four are moving down. What Consensio does is asks the question, how do you get from the first, the bull market, to the second, the bear market? What needs to take place with price and with those three moving averages? And the answer is, it goes through over 1,050 steps. Not 6, not 10, not 15, 1,050 steps to go from a bull market to a bear market. Okay, nobody's going to calculate all that. But what Consensio does is say, let's simplify it by just using two moving averages. In this case, a 7 and a 30. On a weekly basis, which is a 50 and a 200 on a daily basis. But if you keep bringing the interval between those moving averages smaller and smaller, it will become more precise. Now, why am I looking for precision right here? Those that have been following our Twitter, and Leah has spent hours and hours pulling out the last 50 tweets that I did about my short-term signals. And we will present that in a full vlog here in the next couple of days. But what is happening from my perspective with Bitcoin is we have broken the downtrend that shows up on this chart. Tone's got it drawn in as that dark blue downtrend line. And that becomes problematic because we need to get back below that line at some point, or we need to keep going sideways long enough that that line goes down so far it doesn't matter anymore. But we've also got this uptrend line that was just broken that Tone has also got drawn in there. And now we are below that. So we are at a very critical point from a technical, analytical point of view of where the market is trying to reverse its long-term downtrend. And when you look at almost every other analyst, except for Tone and myself and Van Zen, and it was Ugly Old Goat, but now he's backed off unless he's turned around since this recent move, we don't know. But almost every other analyst on YouTube and other places believes that somewhere in this 7,000, maybe 6,800 to 72 is going to be a bottom, and then we're going to go up over 10,000 and keep on going. So the question is why? These are smart people. They're using proven techniques. They're interpreting it the way they interpret it. I'm talking about.
I don't know why. I'll jump in and answer that question.
Well, but that's an important question for me, because what I'm trying to do at this point is I think we're going down to 1,000. But that's just an opinion based on, you know, a lot of look at hyperwaves. I almost will swear that we're going down to the phase 2 line, which comes in right around 4,850 to 4,900 right now and is moving up at 82 points per week, which means when I first made that observation, the phase 2 line was below 4,000, 3,900, but we have been going down so slowly that the phase 2 line has been going up. And now we are at a point where that phase 2 line is coming in almost identical to what Tone's target is around the 4,900 level. A week from now, 2 weeks from now, 3 weeks from now, that phase 2 line will be above Tone's 4,900 level. So what happens between today and 2 or 3 weeks from now is going to start mattering in terms of potential targets in the future. So the reason I had Tone just draw a 2-day, 7-day, and 30-day on the weekly chart is so we can look exactly where Consensio says we are if you go all the way over to the right. But for now, where you are, you're in 2018, March, May, no, 2016, and you see as the prices.
Hold on 1 second,
Yeah.
Tyler. I jumped over to the weekly chart in order
Right.
to try and draw the phase 2 line.
Oh, okay, good. Okay, the dates for the phase 2 line are.
I was going to draw my own, but yeah, if you want to give me dates, that'd be great.
Yeah, if you use
Looks to me like maybe August 24th
I believe
or
that's
September 21st.
no, I think it's in August. And then you want to make sure yeah. Okay, that's good. That'll work.
So that currently puts us, let's see where. Oh, that's still pretty low. No, you definitely have a steeper. You definitely have a steeper one.
Oh wait, here I can pull it up on mine.
Should be steeper than that, though. Though it's not that bad. This would be phase 3, and that's phase 4.
Tyler.
Okay, here I'll give you the 2 points I'm using on my chart.
Sure.
If you go to March 19th
Of what year? 2015?
2017.
2017?
Yeah,
For your phase 2?
yeah,
Is that where it starts?
yeah,
That can't be possible.
yeah, it is. Just take a look at it.
I would not have done them that way.
I know.
Oh, but
this-
then again, this thing did go up for fairly quick.
And you're on a linear chart, right?
Yes.
Okay.
Huh. So you didn't start phase 2 until 2017? I would have started my phase 2 in 2015.
No, because I'm using 1,000 as phase 1.
Oh, okay. I got it. That makes sense.
That's the difference. So
Sure.
that moves it over. So if you use the
Wait, using 1,000 as phase 1. Okay.
Right.
So this is 1,300. Interesting. So do you have the $1,900 low as part of phase 2? So I guess it has to be this. And that yep, this is it.
Yeah, March 19th. And then it's actually not July 9th, but July 16th, which is a green bar.
Right. Mm-hmm.
And so that's my phase 2 line.
Okay, yeah, so that puts us for today's date, for this week, it puts us at 45.40.
Right. And going up at about 82 points per.
Right, 46 next week. And
Almost
the
40.
week of June 11th, 47. Mine is going up a little less steep, which is good. So it puts me at 49.88 the first week of July.
Okay, good.
So so that could be a potential, hopefully a potential that. So if it bounces from 49.75 the first week of July, you and I will both be right.
Will be, yeah, it'll be exactly right. Now, as we've seen with the phase 3 line, it was tested 11 times. This one has not been tested since the downtrend started, obviously. So it would not surprise me to see this one penetrated and maybe fairly deeply, but then coming back and closing above it on numerous occasions, which will give plenty of time, regardless of how fast it takes to get there, for us to get up around that 4,900, 5,000 level, which could be the ultimate bottom. I don't believe it is. I'm giving close to just a 1 in 3 or 1 in 4 chance that phase 2 is going to hold. I think it's going to break for a number of reasons. But in any case, I'm hoping that that line that you've now got drawn is going to be the ultimate bottom. And if not, two things are going to happen. One, your 1,300 is going to come into play. And two, my 1,000 is going to come into play.
Yes.
But going back
to your 1,000 is my 1,300, right? I mean, it's we're kind of splitting hairs.
Yeah, I agree. I agree.
We're using it for the same purposes. Your phase 1 line is what kept the price. Like basically, your phase 1 line is a line that is above everything in Bitcoin pre-2017.
Correct.
And the 2013 high in Bitcoin was like 11,060 on Stamp, 1160 on Stamp. It was 1,242 on Mt. Gox. And in very late 2016, or in very early 2017, trying to remember which one it was, around March of 2017, we did hit $1,350 the day of the ETF, right? So your phase 1 line is approximately the holding of the price under before it broke out. So
exactly.
Your phase 1 line is in the vicinity of this 1,000 to 1,300, and so is mine, but for different reasons. For me, it's a horizontal line off of the 2013 high, and for you, it's just a general line pre-2017 bull market. So
exactly.
We're in the vicinity of 1,000 to 1,300. Now, in a way, people will, go crazy when one of us is totally wrong by 30%. But in reality, when the price of Bitcoin is 20,000 and you're talking about a drop to 1,000 or 1,300, now you're talking like less than 1% or whatever, 2% difference,
exactly.
right? Not exactly 30%. This is what happened to me back in 2015. So during the 2014 bear market, when Bitcoin was like $600 and change, I was calling for a bottom at $110. And the bottom was $150, 150 something. So people were, going nuts about how wrong I was on my bottom call of it being 150 and not 110. Meanwhile, I was making that call when the price of Bitcoin was above 600, and everyone was calling me crazy. It would never fall below 300 at the time, is what everybody was saying, and they were all wrong.
Absolutely, and I would agree with you that once you get down anywhere below about 2,000, anything can happen.
Right, and it's all pretty much the same from a standpoint of a $20,000 high.
Exactly.
Between 1,000 and 2,000 at that point is the difference between a 90% correction and a 95% correction.
That's exactly right. That's exactly right. So to me, the only question is, does 4,900 to 5,000 hold?
I really hope it does, but my probability of it holding, like let's just say when we get to that 49.75 area of mine, I will probably be about 40% certain that it would hold back to the upside and 60% expecting it to break down lower.
Yeah, I've got higher odds of it breaking only because phase 3 broke. And to me, that's what needed to hold to keep the structure in place. The funny thing about a hyperwave, as opposed to just a bubble, is that every step after you can break out above it, think of it this way. Phase 1, by definition, is suppressing price for many years. That's point number 1. So point number 2 is when you finally break above that, everybody should buy, not because of a hyperwave, but because you have just broken above a long series of resistances, and that resistance has now become a floor. Therefore, it's a good buy. But it's too early to call it a hyperwave until it starts building a platform, which is phase 2. Phase 2 is the first platform. Phase 3 is the second platform, at which I call it a hyperwave. And after that, everything else is like building a building. You can only build it so high, and then bad things begin to happen. And in hyperwaves, once you go from 3 to 4, it becomes unstable. And it becomes unstable not because of physics or engineering. It becomes unstable because of people's sentiment. Everyone goes nuts. And instead of stopping at 7,500 or 8,000, which it should have done, it ran up to 20,000. That is typical of a hyperwave. And it's unstable, and now it cracks. And when it cracks, it does it in the same way. It drops sharply, it comes back, because people are not yet convinced. So they're going to buy every dip, and then it cracks again. And now all of the weight above that midpoint of, let's call it 7,500, where we're sitting right today, all of that weight of people that bought all the way up to 20,000 becomes weight coming down on, first of all, the phase 3 line, which was remarkably strong. 11 times on a weekly basis, it tried to hold. The weight was too great, and we broke. Now you've got the weight between 4,900 or 5,000 and 7,500 coming into play. And that's going to be sitting on top of all that other weight as it comes down to the phase 2 line. So I'm hoping, because I believe in Bitcoin, I think even if it drops down to 1,300 or 1,000, we will get another hyperwave, because I believe that we will wipe out 80% of all the other cryptos in a drop from 7,500 down to
freeze.
100. I think they'll
disappear.
disappear. And if they do disappear, that will clear the field fundamentally for people to understand the difference between those cryptos, ICOs, the alts, and what Bitcoin really stands for. And by that time, the regulators are going to make sure that that kind of stuff doesn't happen again, but Bitcoin will still be able to be there. So you and I differ a little bit about what it means if we get down that low. I'm more optimistic than you are, I think. But that's why I'm spending so much time on my short term trying to figure out exactly where we're going here. If we break that 50 moving average on your daily chart to the downside, instead of just sitting right about on it, then to me, that is beginning the next leg down. And that next leg down.
Yeah, we're gonna get back to the moving averages in 1 second. I actually took off the 50 and replaced it with a 2 for you. But I just want to comment on a couple of things. One of them, as Tyler and I expect, that eventually Bitcoin will right the ship, and the new phase one line will now be at $20,000 and not at $1,000 to $1,300, right? The new phase one line will, on a linear chart, would be everything that Bitcoin did pre-2018. That would be your new phase one, hopefully setting us up for 2, 3, and 4. Well, and phase 4 can take us over 100K.
Let me just correct you there, because the phase one will begin when this hyperwave is finished. That's why I think it goes to 1,000. At that point, there is no more hyperwave. The 20,000 doesn't matter. We're starting again at 1,000. Now, maybe the phase one line will be at 2,000 or 3,000, but it will go through a period of time in which it's got to go flat. And that could be a year or 2 years.
Right, or longer, right? It could be a year or 2 years, but
5 years.
But you're not gonna recognize phase one until pretty much phase two is turning into phase three.
Well, no, you'll be able to, if we go, okay, there's two possibilities. One is phase two holds. And if it does, it becomes what I've been terming a funky hyperwave, which means if phase two holds at 4,900 approximately right now, between 4,600 and 4,900, if it holds, then we are still in this original hyperwave and we are still in phase two.
Right.
And now we will build to phase three. We will not go back to a phase one.
Right.
So we are still in this hyperwave. And what will happen then if phase two turns into a phase three and phase three into a phase four is we will blow through the 20,000 top.
Right.
And what that 20,000 top will be is it will be part of phase two.
Right. No, I agree with that.
Yeah.
In a case where we go all the way down, if we break phase two and go all the way back down to 1,000.
Right. Then there is no more hyperwave on the left of the chart.
Correct.
And it's a brand new one. And
right. And chances are your if there is a new hyperwave, your phase one may be at $20,000.
I think theoretically possible, but I doubt it. I think what we would see is we would see some much lower area of resistance.
Right. It really depends how the price behaves over the next few years between 1,000 and 20,000.
That's right.
Right. So I just want to point out one very you guys may find it a little strange, but I just want to let you know that we both believe we're still in this bear market. Now, I still believe we're going to break out of this bear market and go above $20,000 eventually, this decade even, okay? I still expect us to break $20,000, by the end of, hopefully by the end of 2019, okay? Or before that. It would be nice to do it tomorrow, but unrealistic, right? What I want to make it clear is I don't know where or when the bottom is going to happen. All we can do is, give our best probabilities for when and what price the bottom is going to happen. And with every hour that goes by, we have more and more data to do so. Just because let's say the bottom in price and time occurs on my expected date of July 2nd, right? Let's say we bottom out at 4,900 on July 2nd and Bitcoin never goes lower than 5,000. That does not mean that we're going to be at new all-time highs faster than, let's say, Bitcoin bottoming out at 1,300 at the end of the year. Do not assume that just because the bottom came in at a closer to today and at a higher price, it does not necessarily mean that new all-time highs are going to happen faster. We could get stuck in this $5,000 to $10,000 area for years. It is also possible that if we go all the way down to 1,300, let's say in November of this year, we could be back at 20,000 5 months later. Okay, these two are completely independent, and you have to see how and when the current bear market ends before you can start projecting into the future. So whenever people ask me, where do I think the price of Bitcoin will be in 2020? I have absolutely no idea, because I have to see and declare the end of the bear market first.
Absolutely.
Your thoughts on that, Tyler?
Absolutely. The most important thing about technical analysis is that it changes with every new posting of a candle. Now, it will probably not do it dramatically, but to look at a system, no matter what it is, Elliott or sequential or hyperwave or Consensio or any one of 50 other ones, Bollinger Bands, it doesn't matter. Every new piece of data changes the entire picture. So when you're listening to an analyst that's doing Elliott, and there's a bunch of good ones on YouTube, and I've named them before, you will see them constantly changing both their idea of what kind of a correction they're in or what kind of an impulse they are in. And people criticize them for that, but don't realize that new information has come in since the last posting. What Tone just said is the most important thing you need to know about TA. And that is that looking back is easy. Looking at where you are at a point in time is fairly difficult, because what you're trying to do is make assumptions about the next day, the next week, the next month. And every day, week, and month that goes by from today on will change the picture, because now the past looks different. So what Tone just said about you can't make any assumptions about where we are and where we're going other than on a probability basis. Tone just went through his probabilities that came back, I think it was in early May. He said that May 7th or something, he posted those. If he thinks about it, I'm quite certain that those probabilities have changed either slightly or greatly.
Dave, here are those probabilities. They've changed slightly. Everything above just is basically has increased in percentage.
Exactly.
And the possibility of 6K being the bottom has lowered in percentage. Like nothing here has changed as far as its relation to each other.
Right.
But they've all gone up because we are now significantly lower in price than we were, reaching closer and closer to these targets.
That's exactly the point. Everything shifts, and it can shift dramatically if something dramatic happens in the market.
Right. Now, obviously, if the price had gone up since this tweet, and we were instead of $2,000 lower, we were $2,000 higher. Obviously, these probabilities go up, and these probabilities decrease.
Exactly. It's like playing blackjack. Every card that's turned over after you've made your bet changes your perception of what's about to happen on a probability basis. Same thing in poker. Every new card after the flop changes all the probabilities. And so making your mind up, sitting on two aces in the hole when things begin to show up, should change the probabilities. If it doesn't, you're not a good poker player. The same thing with managing the risk and the reward on something like this. So what we're looking at now is a daily chart, and I asked that a very short term be added, which is a 2-day. So we're looking at a 2-day, a 7-day, and a 30-day, and just a snapshot where we're sitting today. What do we know? We know that the longer term moving average, the 30, is going down. We know that the shorter term, the
Right.
7.
We're looking at the daily right now, Tyler. Just
Yeah, exactly. No, I've got it. The daily is going down on the 30, the 7, and now there's a little gold one there, which is a 2. The 2 is the timing mechanism for Consensio. The shortest one gives you a clue about what the market is doing. The longer ones take too long to turn around. And 2 of them are doing just what I thought they would be doing. They've rolled over and are going down. And notice that the price is below both of them, and it is going down. But take a look at the very short term one, which is that gold color. And what happens on a short term moving average is when you move sideways, like we have now done for 4 days, that gold one is going to begin to roll up. And it will cut through the price first of all. Then it will cut through the intermediate term, in this case, the 7, which is the blue line. And if it keeps going up, that means price is going up. And so what I do is I look at the movements between those 3 lines, and I determine where the next pulse is coming from. So over the last 4 days, 5 days, I said my target was 7,400 on the downside. We hit that. And I said, I'm going neutral. Why? Because we had just dropped from 8,400 to 7,400, 1,000 points on 2 days. And that pulse, as a percentage of the movement from 10,000, was big enough to say that that pulse is finished, and now we're going to go sideways for a while. And if you start going sideways, the potential is that you're going to get a counter move back up. And I said, I thought that counter move would be up around the 8,000 level, the red line.
Well, that's exactly what this green arrow represents that I drew 2 days ago.
Exactly right. From a different perspective.
But I'm already walking away from that arrow because of what happened in the last 48 hours.
That's what I did at 2 a.m. this morning. I said, I no longer am looking for that bounce up to 8,000. I'm going neutral again, which means sideways. But I also said, if we drop down back to the 7,200 wick low and take that out, my target becomes 6,300. And all of that is based on those 3 moving lines, knowing that the definition of a downtrend, which we have been in since December, is that the price has got to stay below all 3 of them, and all 3 of them have got to keep going down. But that little gold one we just threw in there is not going to make it easy. It's going to keep reversing up, as you see 1, 2, 3, 4, 5, 6, 7 days ago. On your red 3 coming down 7 days ago, you see what happened is the gold 2-day line reversed itself, took off, and closed and went above the blue line coming down. That's the counter trend move that Consensio is looking for to enter and exit short-term trades while a market is trying to establish its intermediate term goal. And the intermediate term goal has been now for me, the phase 2 line ever since the December top. It is true that the number changes because it's moving up at 82 points a week, but the line itself is not changing. That's the intermediate term goal, and the long-term goal stays the phase 1 line at the bottom ever since December. So that's just a little explanation of why I've been jumping in and out for the last 4 weeks and actually going positive on the short term for as much as 1,000 point gain to the upside and then getting out of it again, going neutral, waiting for everything to fall into line for the next pulse down, and then the short term becomes negative once again.
All right, Leah, you want to jump in with some questions from our audience?
Always. How is it? So it's off the charts a bit. So how is it that OTC buying is at an all-time high under such bearishness, and with how it
I'm
affects?
sorry, I would need proof and evidence that BTC buying is at an all-time high.
For OTC?
Again, do you have evidence that OTC buying is at an all-time high? And then you will have to prove to me how they're buying this stuff, because someone has to sell it to them. If OTC buying is at an all-time high, OTC selling is at an all-time high. Do you guys understand that for every buyer, there has to be a seller of the same amount of Bitcoin in the OTC markets?
Well, and that'll show up as volume, and volume has not been going up. Volume has been flat to down for the last month and a half or 2 months.
Yep.
Right?
And the price of a Bitcoin is still pretty damn high, right? The price of a Bitcoin is what, $7,500. One Bitcoin mining block, right? That's we're still at what, 12 and a half Bitcoin per block right now, right? So that's 12 and a half Bitcoin, or 12 and a quarter. No, 12 and a half. 12 and a half Bitcoin times 7,500. So do the math, right? 7,500 to 12 Bitcoin, that's about $100,000. Or like what? 12 times 770, that's 85 grand. Almost $100,000 plus some fees, right? So let's say $90,000. So every 10 minutes, $90,000 gets created, right? You need to break that demand for Bitcoin. That means every, 10 blocks. So every, let's say 2 hours, there is $1 million worth of Bitcoin being created, okay? Now, you may think that there is so much demand that someone is willing to pay $1 million every 2 hours for Bitcoin, but it's not that. I mean, like, that's the demand that you have to break significantly to claim that there is all this buying demand for Bitcoin. And obviously there isn't, or the price would be higher.
Well, then take a look at, again, volume charts from 10,000 down. Take a look at the big bars compared to.
Well, okay, this is tricky because this is Bitfinex, and Bitfinex has been a bit of a punching bag, right, across the board. So you can see how volume has generally, I should put the average line in there, right, in order to really see it. So volume moving average, we can, make that bigger. And this is one of my parameters here. It's 20. So we're talking 20-day average. Do you have a volume daily preference, Tyler, for this average?
No, I think that's reasonable, 20-day period. And
we can do monthly, right? Because Bitcoin trades every day, so we can do 30. 20 might be good in the stock market because it doesn't trade on the weekends.
Well, and clear from the late February, which is the statement I just made, where that 20 moving average was peaking, it's been going down ever since.
Yeah. Hey, so you got to be real. It's even a little more intricate than that, right? Because if you look at this moving average, I know I can't really, maybe I can zoom in like this. Like basically you can see how, I mean, it's been going down. It's been consistently going down. Now, once again, this is Bitfinex, right? We can test it out on Bitstamp as well using this is the weekly chart of Bitstamp. We can turn on volume, and I know it looks a little bit different here. Let me see if I can change that setting. No scale, that's better. And we can turn on that average. And I'll leave this one at 20, maybe move it down to 10 because it's a weekly one. These are weekly candles, but I'll leave it at 20. And you can see how we're turning to the downside here as well, though just slightly. So maybe I'll adjust this one down to 10 weeks because we've had five 5 months of a bear market. So here's a 10 week. So it's just about a 2.5 month moving average. And you can see how volume is going down.
Right.
Now, this is not OTC volume, right? This is just trading volume. But again, unless you have a job at an OTC desk and one that's been around for 3 years, I really don't understand where your knowledge is coming from that there's all this OTC buying. And I actually have significantly more insider information than 90% of the people watching us, because I actually have people texting me saying, hey, I need to buy a large quantity of Bitcoin. Hey, I want to sell a large quantity of Bitcoin. Do you have any connections, right? So I connect people to OTC dealers every now and then. I try not to get involved. But I actually do get people texting me, asking me about this stuff. And yes, there are some OTC buyers, but there's also large OTC sellers. There's always a seller for every buyer. And again, you don't know what the buyer's intentions are. You don't know if the person looking to purchase 100,000 Bitcoin isn't using 20% of that to crash the exchange market so they can double down on their position when people panic. You have no idea what their plans are.
That was awesome. I agree with you. Sorry, I have to throw out some, I will be honest, trolls. Some of your questions are not very good. So, and with all your trolling, I have to throw them out so that they can be dispelled, which also leads to great answers by you gentlemen. So thank you very much. Now, I do like this one. Oh, and we just got a tip. So actually, I'll do that one for you first. Tone, thanks, Jeff. What's the measured move on the descending triangle on the daily Bitcoin chart?
That's a good question. So we don't have a descending triangle on the Bitcoin daily chart yet. The price would need to come to the $6,500 area in order for us to draw a descending triangle. The down move off of that triangle would actually put Bitcoin at zero. So sometimes you get a triangle that's actually bigger than the chart itself. So there will be a descending triangle on Bitcoin once it's in a $6,500 vicinity, and the breakdown from that triangle will take us significantly lower, but the target of that triangle will only be achieved with the death of Bitcoin.
Thoughts?
Hey, Tone, could you blow up the right side of the chart we're looking at? We just need to go from, yeah, good. Where your second red line is drawn.
And
This
Jeff
one.
from the tip is saying 1,300 is the top of the triangle.
13,000, you mean?
13,000. I don't have my glasses on. Good call.
Okay, it has to be 13,000 because 1,300 is way lower.
Sorry, Jeff, I can't see.
No, you see, 13,000 can't be the top of the triangle, and here's why. In order to draw a triangle, you need 3 points on a horizontal plane. So what that means is once the price comes back down to the $6,500 area, you will have your future point here, your second horizontal point from April, and your first horizontal point from February. That means the top of the triangle has to come at some point earlier than February, not later. So your best case scenario for the top of the triangle is your lowest. Yeah, actually, you're right. It could be 13,000 or potentially as high as 17,000. But yeah, 13,000 would make sense. So it would be 13,000 down to 6,500. So what's the difference between the two? The difference is another $6,500. So it'll literally put your target at zero for the price of Bitcoin.
Right.
Right. So that target will not be achieved unless Bitcoin dies. But this is another reason why Tyler and I continue to see that $1,000 to $1,300 is a reasonable low-end target. We're not saying it's going to happen. We're not even saying it's the most likely target. We're just saying that it is a reasonable target based on technical analysis.
I want to, if you go back to that, the right side of your chart,
Yep, right here.
I think we're going to disagree on this one. But one reason I've got a target, if we drop below 7,200 now, down at the 62 to 6,300 level, is if you extend that red horizontal line, the second one, to the left.
This one.
Yeah. I see a Head and Shoulders that just broke 4 days ago, and the target of that is approximately, I would say, I'm just looking at it quick.
Well, it's 10,000 to 7,500, so it's $2,500 down.
Exactly, which gets us down.
Gets us back to 49.75.
Exactly.
Now
that's one of the sloppiest Head and Shoulders I've ever seen.
Yeah, it's also, but if that's a Head and Shoulders, then we're within a bigger Head and Shoulders in the opposite direction, potentially, if we turn around here.
Well, yeah, and that's what Haijin Lee has been saying, that we've actually got a cup and a handle working.
Yeah, I think everything in that realm, cup and handle, Head and Shoulders, on daily candles, I think everything looks sloppy.
Yeah, it is very sloppy.
The only thing I can do here is potentially make it a linear chart, take away everything else to make it cleaner, make this linear chart, very visible, and even drop all other annotations. And now, I don't see any Head and Shoulders or any cup and handles here.
You wouldn't think
It's just all sloppy.
What about, where the heck is this thing?
I see potential triangles like what our tipper mentioned, that if we bounce one more time off of 6,500, then we have, a very gigantic descending triangle that may not, and if that is a descending triangle, then this is the line from 13,000 to 12,000 to 10,000. It can bounce back to 8,000 from 6,500. Like, this triangle may not even break down until like September. Because it would extend all the way into the end of year.
The bottom at 6,550, you don't see that as the bottom of a cup, and what we've got working on the right side is the handle?
Handle is way too big. It's gonna, by the time we get to 6,500, the handle will be the same distance as the cup. It just didn't go as high.
Right.
Like that, it's not a clean, nothing is clean here.
Right.
The only thing that's clean, especially looking at the linear chart that removes the noise of intraday swings, is that we have lower lows and lower highs, and we have not broken that trend.
Yeah, but we need to get below 6,800, 6,500 to keep the lower lows going.
Correct. And I see nothing in this chart that's telling me we're not going to do that.
Yeah, and I agree.
All right,
Okay.
Leah, what else you got for us?
All right. So this is actually an interesting TA question that I would love to hear you guys just explain. So what TA indicator allows you to distinguish breakouts from a rejection when hitting a stop and reverse?
I guess that's a question for Tyler, but for me, I would want to, a breakout for me is a breakout above the prior high, like this green line that you see on the screen off of the $9,900 high. Not exactly a stop and reverse breakout, but the rules might be the same. I would need a close above this line followed by a higher high.
Yeah, for me, I use the stop and reverse points, which TradingView does not do a good job on because their parabolic stops are so small it's almost impossible to see. But some of the other charting services, it's very clear what's going on. I use them in conjunction with this Consensio concept that if you get a reversal on a stop and reverse point after a downtrend like the one we're in, by the way, we're still in the downtrend from 20,000 using parabolic stops. We have not once violated that. That to me is one of the most powerful signals you get that a trend is still in place. And that's why I keep insisting that we're still in the downtrend. And we're nowhere close to taking that out. It's over 10,000 we'd have to get to. But on a shorter time frame, depending on how short your stop and reverse time frame is, if you're using dailies instead of weeklies or 4-hour or 12-hour, there have been a number of penetrations of the stop and reverse of this down move that we've been in. So then you use the 2 or 3 moving averages to give you a leading indicator of, is there really any strength, or is the SAR simply going to flip again shortly? And so far it keeps flipping back to the negative side right up through today.
Gotcha. I'm trying to decipher these questions. I think maybe only just one last one, and it's not on the charts unless you guys want to continue looking at the charts. Have any last comments? The rest are more just interesting in the space. It's up to you, Tone. Maestro.
Sorry, can you repeat that question?
The rest aren't on the charts. I think that there's 2 that will be interesting for you guys to discuss. So you can keep it up or not. One is about how ETFs down the pipeline will affect things. I don't personally think that they're going to come anytime soon. There's been about 3 questions about ETFs. I don't fully agree with what the rest are saying, but if you guys want to speak generally to how your potential TA would shift if and when ETFs are finally approved, or
Sure.
any other instrument beyond GBTC and Grayscale.
Yeah, this is going to sound a little bit strange, but I think that ETFs, when they show up, are going to significantly increase the volatility of Bitcoin, not decrease it. I think that there will be a pretty damn big demand out of the financial industry for ETFs, but ETFs are not going to do a very good job of price discovery. Price discovery will still be with these crypto exchanges, unless Bitcoin goes away with these exchanges like Bitfinex and Bitstamp, they all go away. But if there is a large demand for ETFs, that's a lot of Bitcoin that's going to get out of circulation, and people are going to be trading the shares of the ETF. And when the ETF doesn't have enough shares, they're going to have to go and take Bitcoin out of circulation and lock it up for the backing of the ETF. And with more and more Bitcoin going off the market, some will say that this is a good thing because it'll raise the price of Bitcoin. Perhaps, and it probably will raise the price of Bitcoin by taking Bitcoin out of circulation. But it will increase the volatility of Bitcoin because there's less Bitcoin to go around on these unregulated exchanges. Like, I don't know what a good solution is here, but I see the addition of ETFs adding volatility, not decreasing it, because it's not going to be exactly in line with the underlying exchanges, just like we're seeing right now with GBTC, that goes between 20% over the price of Bitcoin to 200% over the price of Bitcoin, right? And the more Bitcoin GBTC takes off the market, the more volatile the underlying asset becomes with less Bitcoin available for trading. Hence, the more volatile GBTC becomes, because people get euphoria and panic with like basically you're splitting up the supply and like locking it up. It's really hard for me to explain, but in my brain this all makes sense. I'm not sure if Tyler followed all that or if he agrees.
I did follow it, and I think the jury is out from the perspective. If we're just talking about Bitcoin, if we're talking about other cryptocurrencies, funny things begin to happen. But what I see the SEC approving at some point is a Bitcoin ETF that trades as an ETF and not as a closed-end fund like GBTC, which means there won't be a discount or there won't be a premium. It will trade at the net asset value of the number of Bitcoins that they hold, except for one thing. ETFs stop trading at 4 o'clock in the afternoon and the underlying continues to trade, which means it will become very volatile on the opening the next day if there's been a move up or down in Bitcoin prices, and there's nothing you can do about that with the ETF unless there's a series of them worldwide where you can buy them on other exchanges and roll them like you can with some commodities like oil and gold, which you can do, but it's a pain. But that model is the same as the GLD for gold or the oil ETFs or the silver SLV, where the only thing in the ETF is the commodity itself. And then it's just a matter of, remember that it's true that you are taking things out of circulation. The GLD is enormous. It's the largest place in terms of stockpiling of gold in the world other than central banks.
How much gold is actually backing GLD? Do you know, Tyler?
It's dollar for dollar.
You sure there's no fractional reserve in GLD?
No, that's what I'm almost positive. That's the way it was for the first 10 years. And I haven't noticed that any change was. So if you just take the number of shares, and you can just look that up on Fidelity or whatever, total number of outstanding shares times the price of those shares, that gives you the total capitalization in terms of the amount of gold that's being held. There are others that will do 2 or 3 or 4 times by using futures the amount of gold they're actually holding. And some don't hold any gold at all. They simply use futures to represent the gold. But what the ETFs that have been presented to the SEC were attempting to do with Bitcoin is to make them one-to-one. And in an open-ended way as a true ETF, as opposed to a trust or a closed end. There are hundreds and hundreds and hundreds of closed-end funds that trade on the exchanges around the world, particularly the New York Stock Exchange, that trades at discounts or premiums to the underlying assets. And that's a great way to be able to trade, because those, particularly like high yield bond closed-end funds, very often will go to very big discounts. You can get 30% discounts in volatile markets on closed-end funds. Whereas GBTC, the biggest discount I've ever seen occurred just intraday at about 2%.
Tyler, so I'm looking at an article by Business Insider from 2016.
Okay.
And it does state that GLD, every single share is backed by gold, 30 million ounces worth $34 billion.
Okay,
that was as of May 2016.
Okay, so what's that? If you divide the 34 million ounces by the total dollar amount, how many what is the price of gold based on that?
Oh, I mean, it's easier to go to the gold chart and look at May 2016. So in May of 2016, the price of gold was pretty much what it is now. Here is May, and it was around 1270.
1270. Okay.
So I don't know how many more they issued, but the point is, okay, so there is gold back in the ETF. See, there's another huge difference, right? So it would be very weird for Bitcoin to have an ETF while price discovery takes place on unregulated Bitcoin exchanges, because price discovery for gold takes place on the CME futures. But that's not where Bitcoin's price discovery takes place. So the bigger question you have to ask is, when the ETF comes, where is the price discovery happening? Will CME have Bitcoin settle for the future? Because if the CME contracts are actually settling in Bitcoin, then it's possible that these crypto exchanges are going to slowly die out.
That would be great.
But
no, I hear what you're saying. I think that's a very important point, and probably why the SEC did not approve these, because to me, GBTC is much more problematic than what I just described in terms of a pure ETF with backing of Bitcoin. But the pricing mechanism still has not been settled. We're getting closer, but it still hasn't been settled.
Hey, speaking of gold, since I have the gold chart up, I'm bearish. I'm neutral to bearish medium term, and I guess I'm more bullish than bearish longer term, because it's now been a significantly long time since the 2015 low, and for now we continue to make higher lows. So until gold goes below, gets back to the $1,200 area, as long as gold stays in this like 1,250 to 1,300, I am intermediate term leaning bullish, but I don't see the cross of 1,400 anytime soon.
I would agree, and just to be fair, I reduced my gold holdings last week when we dropped below 1,300. I still am bullish, but not short term. So I dropped from 15% to 10% holdings of the assets that we have. And if we were to drop below 1,250, I would drop that down further, because we need to stay, as you just said, in this range where we've got a shot at 1378 fairly quickly. But what's happening is the short-term moving average has rolled over now and is below where it needs to be. So again, a Consensio call on something I'm very bullish for if we get above 1380, or let's call it 1400, then we could have a very nice move up to the 15 to 1600 level and possibly even challenge the old highs at 1900. But we are not there now. Short term is nasty.
Right, and the long, sorry if I can jump in on gold.
Oh wait, I wasn't screen sharing that whole time.
The long-term moving average was flat, right? Only like 2 weeks ago. But
I thought I was screen sharing the gold chart. Here it is.
But was turning up a little bit, so it'd be good to see what's going on, because yeah, I mean, it's an early warning sign.
You see the short term, the gold at the top coming down,
right?
Whereas both of the longer ones are still up, but price went below all three of them. Now it bounced back up on Friday, Thursday or Friday, and is now above the blue line, but it's just not where it was before. Up until the gold line rolled over, we were in a full bull market, but we are not any longer.
And Nasdaq, what are your thoughts? I'm almost 100% bullish on Nasdaq, The only thing I still need is I need a close above that last Fibonacci line.
Well, I do too, but I need it because of on the NASDAQ, because of the broadening top. I've gone bullish the Dow and the S&P, which charts are actually not as good as this one because they did not go into a broadening top. But I'm getting nervous again that we aren't able to get back up there, and we should be able to. However, on the NASDAQ, take a look at the 3 moving averages in the price. That's the definition of a bull market. All 3 going up, all of the short above the intermediate above the long. The only thing holding me, but I'm 85% long NASDAQ. What I'm saying is that 15% caution is because of the broadening top. As soon as
I'm slightly higher than you. I'm at 90% now. I'll go 95% above that, above 7,500 and 100% in the vicinity of new all-time highs.
Yeah, and I'm at 100% at the new highs.
Yeah, so am I. Should I pull up the S&P?
Yeah, because you've pointed this out. I've been negative on the NASDAQ because the 10 biggest stocks in it, which were coming very close to hyperwave for phase 4 lines. And then we had the broadening top on the index, but it is actually in a better position than either the Dow or the S&P.
Yeah, that's how I saw it back then. Right. So here's the S&P weekly. And it would have been nice for it. I mean, it held the 50-week moving average beautifully.
Yeah.
And for the S&P, like I would need for the S&P to get to 2,800 for me to go bullish the S&P. So I remain more bullish NASDAQ right now than S&P.
Right.
But yeah, so I would need S&P. I'm maybe 80% bullish S&P. I would go 90% bullish S&P at 28, and then 100% at new highs.
Yeah, and same thing I think with the Dow.
Yeah,
it's very similar.
All right. Anything else, or should we? I would even talk about the short-term view of Bitcoin, but it doesn't really, like, to us, we're more investors in Bitcoin than active traders. So on these podcasts, I mean, there's really no reason to go below daily. I do it for our morning shows, but this is a bigger look at the price of Bitcoin.
Yeah,
Sure.
I would agree. I'm throwing my hands up and I'm neutral in the short term, and I've been whipsawed back and forth, but the 7,500 level is basically where I got out of my negative short-term view. Then I went neutral, then I went positive, then I went negative again, right at the same level. So anybody looking at this kind of analysis basically is net unchanged on those switches.
All right, guys, we're going to go ahead and leave it there. If you are interested in more of my work, please check out tonebase.com. I have the link for my workshops. The next one coming up is in Ireland, then London, Montreal, and Berlin. Please register through the website. If you are interested in using that random number generator with the numbers you see above and below my charts, please check out the indicator section, and with the lots of info here. And of course, if you like my work and you'd like me to continue to bringing you these videos, please support through the affiliate links. And if you're going to use any of these products or services, please use the links provided just by clicking on the picture. Once again, on this episode, I was joined by the lovely Leah Wald and Tyler Jenks of Lucid Investments and Lucid Funds. And you can check out their website, lucidfunds.com, or follow them on Twitter. Tyler's Twitter handle is Lucid Investments, and Leah's is Leah Wald 1.
I got to figure out how to switch that. All right, everybody. Thank you so much. Thanks, Tones. Thanks, Tyler. That was really interesting, very comprehensive.
Great. Thank you very much.
Everybody, Champions League is in 15 minutes.
Yep. Thanks, guys. Go watch football. Talk to you all later.
Bye-bye.
Bye.